Welcome back, everybody. I can tell that the networking is already alive and well, and it's only 11 in the morning, so that bodes well for the rest of the day. We are going to get into the first plenary of the CTIS 2023. And we are going to be discussing the perennial issue of financing. It is in many ways the fuel that keeps the world running. Without it, even the best laid plans, the best projects, the best development strategies are difficult to implement. What we know is that we are living through increasingly uncertain, volatile, in many ways quite frightening financial and economic times globally. There's plenty of risks to go around amid a more complex and certainly, and a much more uncertain picture. Now, that being said, within that context, there is, one would imagine, also significant opportunity. And I would say that the very complexities that we are increasingly seeing, the global shocks that we're seeing, the geopolitical realignment of the world, comes with both the bad but also potentially the good. And these are some of the themes that we're going to get into in this discussion. What the state of play is in terms of financing, what some of the big challenges are that we're confronting, and what are some of the more important trends and issues that need to be understood to get a better understanding of not only what is happening in terms of financing for emerging markets, but of course the all-important issue of how to scale up financing for emerging markets. With me to discuss this issue, I have to my left Mr. Sanjeev Gupta. He's a member of the board and the Director for Financial Services at the Africa Finance Corporation, and Mr. Saif Mailk, who is the CEO for the UK and regional head for Standard Chartered. Now, gentlemen, we have about 45 minutes or so for this discussion. And this is a rather large topic. We could spend a bit of time on this. But to kick us off, and for the sake of this discussion in terms of framing, there's kind of two main anchors that I think we should have the discussion around and then see where it goes. One is, what's the state of play? It would be good to get a bit of a sense from both of you. What you're seeing in the financing space when it comes to the emerging markets of this world. And then talk a little bit about the opportunities that are within this kind of changing context that we're in. Let's understand that context a bit more. Let's try, to the extent that we can, identify some positives about it. But rather than immediately, box you into that, why don't I just hand over to both of you, each for a couple of minutes, to maybe just help set the scene, give us a bit of context about your work. And Sanjeev, if I can start with you, an additional question I'll throw in there as you talk a bit about what you do, is life getting any easier for you? That, for me, is a question, because it's a bit of a good barometer as to where we are in terms of finance.
It's a good thing he's taking his hat off.
Yeah. Had to. Yeah, so good morning, everybody. And always good to see some familiar faces, especially in the front row. Makes you feel a little more comfortable, I suppose. Life is getting easier. That's your question. It so happens it's my 30th wedding anniversary tomorrow. So you can make your own decisions about whether life is getting easier or not. Obviously, as a banker and as a DFI kind of institution that I represent, it's dangerous for me to delve too deeply into a philosophical way of looking at the world, right? Because for us, on the African continent particularly, which is the continent I work in, our realities are very basic, right? It's almost a constant refrain of need that needs solutions. And therefore, the geopolitical, the market, the interest rate cycles affect us, always have historically affected us disproportionately. I mean, it's a fact, right? And it needs to be reiterated that in many, 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 many ways, Africa gets affected by everything that happens in the world, but more often than not, it wasn't the reason for it, right? The climate issue being one prime example. So for us, Lanre, we try and say to ourselves that men may come, men may go, but we have to go on forever. Africa is not an asset allocation game for us. It's the only reason we exist, and therefore it is incumbent upon us to do what is in our control. And I'll just throw in a couple of lines and then hand over to Saif, is that the way we try and therefore manage what clearly is a set of events that very often and more often than not in our control, is to say what is in our control, okay? And what is in our control, as AFC we have found, is that it is not true that Africa does not have capital. It does. It's just that it doesn't get allocated well or used prudently or banked properly. So we work very heavily with central bankers, pension funds, and governments to see how we can bring African capital to work for Africa. Because we believe that if we can make that happen, as we have done, our own track record shows that, then global capital will come. So that's one. The other thing that is in our control as an institution, and therefore we work very, very closely on that, is the idea of capacity building. That if you cannot build an environment which allows legislators, policymakers, leaders, private sector entrepreneurs to thrive, where their expression of thoughts is understood, their relevance to the world is appreciated, and their ability to articulate the needs is well comprehended, then you will never have a counterparty with whom you can work. So that's the other area which we believe is in our control, and we work around that. I'll stop here now, and obviously I can build on this further, but over to you, Saif, in case you're feeling left out.
No, I think well done. I think well spoken. I know every time I have my friend Sanjeev on a panel, I'm normally left with the end sort of statements to make, because I think he makes some really good points. And we ironically we are sitting on this panel today. I think both from a Commonwealth background. I'm actually born in Zambia of Indian origin, and grown up and worked most of my professional career in Africa. Sanjeev also being Indian origin, but we're both very heavily focused on the African continent. So it's good to be able to speak to that. But I think we're here to talk about financing in general. Standard Chartered Bank is an emerging market bank, so with a very strong network in Africa, Asia, and the Middle East, which is where we do the most of our business. We have 90,000 employees, mainly in those three regions. We've also have a growing business now in the Americas and Europe, especially over the last 5 years. But to complement that part of it, because I think clearly, as we see global growth and as we talk about the sort of the historical global sort of north-north trade, or the Western world trade, we are seeing very clearly that the South-South, which is really sort of from South America, Africa, and to a large part Asia, is the one that's growing the fastest, is the one that's giving the most opportunities, is the one that really will be the bedrock to what the next phase in global growth comes about, and that's through trade and other services. So for us, when I think Lanre asked the question to say, how are we feeling? I mean, post-pandemic, coming off the post-pandemic sort of high and then sort of coming back to a normality, it is challenging. I think there's no doubt about it. I think, unfortunately, some of the South-South sort of regions, Africa in particular, have felt the triple whammy of interest rate increases, inflation increases, which then has direct impact on stuff like food supply and a lot of inputs that come into the markets, which prices go up and things like that. They've also had the big challenge of currency depreciation, and I think we've seen that in big markets like Nigeria, Ghana, and most recently in markets like Kenya, which have been the real sort of driver in Africa, because Kenya has always been, has I think the oldest capital markets, business setup and association and things like that. So to be able to see that pressure come in markets like Kenya, it is something that's biting Africa. So we have to work around that, and we have to see what we can do. So I think that's one part about how am I feeling. I think it's really around how to do that. And coming back to Sanjeev's point, I think the solutions comes about, you have to look internally. And so you have to look at where is the African capital. How do you work with development organizations or multilateral development organizations, quasi-commercial organizations like the AFC, Afri-Exim, Africa Development Bank, and others, to say, what do you do to stimulate that growth? What do you do to bring capital in? I mean, I think, I'm going to quote a figure, and I'm sorry, I'm going to check this, but, I don't think when MDBs, or multilateral development banks or institutions, when they come in, I don't think that they crowd out private capital. I think that they have even a bigger role to crowd in private capital. And I think there's a stat that I do want to quote here, is that we had a study made, where is it? That for every $1, estimates suggest that for every $1 spent on project preparation, so this is where we need the MDBs to come in and really play a role, is on project preparation, so that helps us to really assess as from a private sector point of view. So for every $1 of project preparation can crowd in up to $276 of private sector financing. And that's really important, because that then generates, and that can then scale up and really replicate and move forward. So I think, it's things like that maybe we can tee it up now as we discuss, but I thought we'll put these on the table so that we can have a discussion around that.
Absolutely. Okay, so there's already quite a few things here to pick up on. One being...
And you've only got 15 minutes left.
Yeah, one being what you alluded to, Saif, which, correct me if I'm wrong, but the role of public-private sector and partnership in that context. Sanjeev, you were strongly nodding in agreement with that point. Could we perhaps build on this question of public-private sector partnerships when it comes to financing?
I mean, firstly, please understand, when I'm nodding at Saif, it's an old habit. But nothing to do with what he's saying this morning. Okay. Having said that, I also had to nod particularly a little more vigorously than usual when Saif so deftly passed on the issue of de-risking projects to the MFDs or the DFIs. In other words, representing the private sector that he does, he is basically saying to us that we will only come and pick up the cherries once the cherries have been plucked, right? But without trying to be too sort of light-hearted about it, there is a lot of truism to it, right? I mean, historically, even today, in any part of the world, whether it's developed, whether it's developing, whether it's rich, whether it's poor, the state and the public sector has a role to play, right? Has a role to create the environment, has a role to deploy and distribute risk capital, and has a role to play to de-risk projects for private sector to come in. In the Africa context, given the state of political evolution, if I can call it that, on the continent, given the state of capital markets evolution that we have, the DFI community almost has a much wider role, therefore. It's almost acts as a bridge between the government and the private sector. It acts as a bridge between the sovereign and the international stakeholders. It acts as a bridge between the scarce capital that is available locally and to be able to develop and de-risk projects out of that so that global capital can then follow. So therefore, I think there's a huge responsibility that DFIs in the African context has. But having said that, one of the challenges which we often face, and particularly in modern times, well, modern is a wide term, in current times we are facing, which is very painful, and I want to share this with the audience because it's good when you share pain, right? You feel like it's good about having pain, is that the geopolitics has actually reached a stage where we feel on the continent that somebody needs to grow up, right? If not to grow up for themselves, to grow up for the wider world, right? Because I'll just tell you a story, Lanre, and this is a real story that happened 2 weeks back, where it so happened as AFC, I have had a facility from one of the greater powers of this world for a while, right? And I recently renewed that facility with that greater power of this world. Another greater power of this world called me, okay? And it was a call from a very senior official of this greater power. And I was actually asked that why am I taking funding from this greater power when we are discussing strategies and projects with this other greater power. And I obviously had to say that this greater power, Mr. You greater power, has so far only given me a textbook, while the other greater power has been giving me a checkbook, right? If you see where I'm coming from. And I think as people who are trying to develop a continent which is made up of 1.4 billion people, we should not be stuck in a situation where we have to make choices. It's not fair on us. And I'll just stop there and maybe hand over to Saif now.
Well, just a quick comment there, and I mean we've now strayed into some fairly significant territory in terms of topic, which is this geopolitical realignment. But you know, for anyone in the audience speculating about which countries Sanjeev might be speaking about, I'm not gonna.
He's here all day. They should just grab him.
I'm not gonna.
No, I can add something.
I'm not gonna name any countries, but all I'll say is, Sanjeev, is that I recently visited the United States, and one of the countries I really want to visit is China.
Nice idea.
I have no idea if that has any relevance to what you were saying. But
Okay, carry on.
Saif, did you want to pick up?
I'll add something to that, but maybe Saif wants to pick it up now.
No, I'm not going to pick up on this particular point. Yeah, I think we'll leave that stewing for a little while. But again, I think it would be, so I think, we have, a lot of opportunities that we talk about. It would be remiss on me that we don't also talk about from a climate finance point of view. I think that's very, very key. Again, the South, specifically Africa and many of some of the Asian countries, are not heavily responsible for what's going on globally, but the playing field suddenly becomes very level, right? And therefore, we have to see how do we go about managing that. And for me, transition finance, and for us, transition finance is a very key part of that. So if we look at our continent, specifically our meaning in Africa, or you look at Pakistan or Bangladesh or wherever it is, to expect nations in those places to get up one night and say we're going to switch off all reliance on hydrocarbons to power generators, to do whatever, and then wake up the next morning and switch on and have renewable is completely crazy, right? And therefore, what can we do to help drive that transition, to help encourage countries, corporates, and other players in those places to put up plans to say, how do you move towards some sort of net zero commitments and targets, and then work for that. So we have, as a bank, we have committed $300 billion as part of our transition finance to work with those corporates and countries to say, how do we do that? But we do encourage, especially sovereigns, to say, we would love for sovereigns to have commitments, to have targets, and then to have action plans to work towards that, because that makes it easier for us to then come in. And I know Sanjeev and many of our other partners are also looking at that very seriously, because it is a very important part of sort of how do we give a just world to our kids or the next generation, whoever it is. So that's one part that I just wanted to touch on also, because I think it's a very, very key part. And the numbers are also quite staggering. It could be anything, right? It could be there's up to probably $1 trillion that needed for requirements. But we did what we call an adaptation in 2023, an adaptation report that said that if countries don't invest up to $33 billion this year, it's basically giving away projects of tenfold of that, sort of 10 years down the line. And those numbers could be anything, but the reality is that the opportunities for that is vast. And we have been, we've very clearly been focusing on stuff like solar and wind, but there's a lot of new technologies coming in. A lot of our countries that represent here are sitting on key resources and key infrastructure that can take advantage of that. So I just thought I'll bring that to the fore also, as part of a discussion, because part of all this financing and all these different things that we talk about is that honestly, we're not seeing the right level of bankable projects. And this goes back to my earlier point, is that how do we get to a level of a bankable project that the public-private can come in and participate? And this is where we need help from our friends to come in and provide little bit of that pressure at the sovereign level, because they have that relationship, with the sovereigns. And it's a hand in hand. I mean, yes, we want the cherry, but I don't think it's just about the cherry, picking the cherry. I think it's also about making sure that we do have the right projects that will deliver down the line.
Yeah.
So this touches on one of those dynamics that perhaps to some extent it would fall under the category of things that are out of your control, Sanjeev, that you spoke about earlier, which is that there is this continuous debate around to what extent the problem is in places like Africa or emerging markets, or whether or not there might be a problem with how the world approaches these emerging markets. So there have been complaints, for example, including by some African leaders, around the global financial architecture being out of step, being not fit for purpose for the development needs of the global south, and that we need to see a bit of an overhaul of the global financial architecture. Where do you see that debate? Do you think that there's any sort of, we may ethically agree with that. Is it a realistic demand to make of the global economy?
No, I think I made myself very clear in my opening remarks that I'm not here to talk about what others should do. I can only share what I'm doing and what I intend to do. Because, there is an old cliche that you never get what you deserve. You get what you negotiate, right? Okay, so to us, as the corporation that I represent, today's geopolitics, incidentally, we see as the greatest opportunity for the continent. Because today's geopolitics is not bipolar, it's multipolar, right? Number one. Number two, today's geopolitics actually includes powers that have intellectual, financial, and military capacity to compete with the best, which means the choices are real, right? And today's geopolitics is also in such a state that you are seeing alternative institutions to the Bretton Woods institutions coming up. So today's geopolitics, therefore, for the continent, I see as an opportunity, not as a threat, as it always has been. Let me just quickly, explain why I'm saying that, because again, I go back to my original point that I can only do what I can do. I can't tell people to change unless they want to change. And people generally, I think, and I'm not a behavioral science expert, but in my 35 years of doing business in chaotic markets and global markets, I realized that people only, change out of guilt, fear, or greed, right? Now, guilt hasn't worked for the continent, so let's just move away from that, right? Fear kind of works sometimes, but it tends to be very erratic. So we have to, therefore, get into the greed side of things, right? Because greed, it seems like it works, okay? Now, the way, therefore, we are positioning it is to say that for the first time in recorded history almost, Africa actually is no longer the problem that you're looking at, but the solution that you're looking for. Whether it's for food, whether it's for energy, whether it's for new markets, whether it's for critical minerals, whether it's just to keep people in Africa so that they don't come and threaten your lifestyles in your own countries, you need to invest in Africa for your own good. Because if you are going to build your batteries, build your electric cars, you need certain elements called minerals and metals. So to us, therefore, the rhetoric has to be that it's not about what you do for Africa, but what as Africans we can do for you, because we have the solutions. And that's how I think we will turn it around, where the African opportunity will be contextualized in the overall scheme of need and greed, as opposed to guilt and fear.
Is this as simple as saying, this is a perception issue then?
It's quite funny, actually. I'm sorry, Saif, if I'm, stopping you from challenging me, which I'm sure you will. Is that, it's so true, isn't it? That on one hand, you have always had a narrative that Africa is risky, Africa is dangerous, Africa is erratic. On the other hand, virtually everything that you have basically required for the world in some form or manner has an Africa connection, right? So somewhere, of course, it's a narrative more than a perception. The perceptions come from narratives. And for us, as a small little institution in this vast continent of Africa, we don't want to get into those debates. We don't want to say, you know, your perception's wrong, please change it. I mean, there is data. I mean, Saif was quoting some data, so I can quote some as well, is that, you know, the project default rates on the African continent is the second lowest in the world. It's a fact. It's not something I'm saying. That doesn't mean that there are no risks in Africa. It means that projects, therefore, do get over-engineered to a point where we take away most of the risk, right? So perceptions will not change, Lanre, unless people see a need for those perceptions to change. So that's why I go back to my original refrain, as I said, that I don't really worry about what people say about Africa. I have to show what Africa can do for their challenges. So I'm already engaging with all the greater powers today in the world, not just one or two, about their need for critical minerals. It's a negotiation tool I have, which I didn't have in the past. I'm talking to a lot of the global companies around them diversifying their energy sources. It's a negotiating tool I never had till 2 years back. Don't tell me what happened 2 years back. You know what happened, right? Similarly, when it comes to issues of renewable energy as a source of power, as a way of getting carbon credits, that's an opportunity for Africa. So I have to make it happen. So I can go on the basis of a very simple policy that we have adopted, that we will do what we can in Africa to serve the need of the world. We will not tell the world to help Africa. We will try and find a way of Africa helping the world.
It's more compelling to hear that these days than it's been for quite a while, and a lot has changed in the last couple of years in particular to be able to make a statement like that. We'll get back to more of that, but for now, sorry if you were going to challenge Sanjeev on something.
No, you don't have to.
No, I think a couple of points there is that it's also the commercial nature of the way the institution is being worked, right? This Afri-Exim, Africa Development Bank, is run predominantly by Africans who have either been, have come back or, want to give back. And I think that's very, very important. But it's the commercial aspect of it that is, because, you will have, whatever your type of shareholder is, that you will have a shareholder, whether it's a sovereign entity that's invested in you or, a philanthropic entity or whoever it is. And you have to give the results. And I think that mindset, number one, is very important. Number two is that, as Sanjeev has rightly pointed out, for an institution like AFC and whoever it is, they have enough to do. They have enough to do. They don't need to be going around and doing that. I think the discussion points here is that sometimes in Africa you have to play the long game, and many investors come in thinking that they can come and make an investment and decide to leave in 5 years, and I think that doesn't work out. So I think some of the perception issues come through that where you get caught up. So there's different, it's not that Africa has different rules, it's just the continent is a very diverse place to operate with 1.4 billion people of all in different countries which are absolutely different in each makeup and thinking and operating model also. So I think it's really getting to understand that, and I think this is where the perceptions part have to be managed, and that, and then you have institutions like AFC or hopefully like our bank, where we are in 11 markets in sub-Saharan Africa, where we are operating in the different places. We have local teams on the ground, but we're able to bring that together and say, okay, fine, this is an Africa region and this is what we think. But don't for 1 second think that we can have a single policy that we can note down, because it's going to be different everywhere else. So I think it's very clear that the opportunities are there. I think Sanjeev has put that very, very well in terms of ensuring that the projects that they look at is to serve a global need. And hopefully at the same time also an African need, right? We've seen in Nigeria, there's some big projects that are going on a refinery that will solve a big historical challenge in Nigeria, which is providing refined petroleum products as opposed to importing them, which has been the biggest pain of the foreign exchange usage. So I think things like that are very important, but then play a big role also globally because of the size and the nature of it. So there's no doubt about that. But there is a stigma. You can't get away from that. There is a stigma to say if you're going to go into Africa, how do you tick every box as Sanjeev has rightly pointed out, that before a project is done, everything needs to be solved. And I think that's where some flexibility needs to come in, and some thinking has to come in to say that the track records speak A, B, and C. Sometimes there's no track record, so track record has to be built. But it's one of the things. I read just one last point, a very interesting point to say, we've had a couple of coups in West Africa, but those economies are now one of the fastest growing, in the world, right? Forget about Africa. So, there's a new nuance there that you can bring in, and you can say, how do you literally break away and become and think for yourselves?
Where does that flexibility that you say is needed come from? Where does it need to come from?
I think it's across the board. I think one is from the private sector players themselves, developers who are coming in, because for many of these large infrastructure projects that we're doing, we don't have in-house capabilities from the continent or from wherever. So you have to build that, and that will come through time. So there is others who will come in, so for them to understand the market. I think there's still issues at the sovereign level around, in many instances, corruption and other aspects, the macro challenges that sometimes you can't control, but you can create an enabling environment that helps with that. So I think it comes right down, in my opinion, through through the different departments and different agencies that all have to come together. And sometimes easier said than done. But I do feel that as a multilateral institution, as a multilateral development bank, they do have some role that they can play that is closer to the sovereigns, closer to the country in question, that can help guide and sort of move some of those discussions in the right way. So I think this is where my main point is, that if we work hand in hand, we can play a certain role, but our friends and not just the multilateral development banks, but also the multilateral institutions, I think they can play a very important and critical role also.
Are you seeing much appetite for this kind of flexibility, Sanjeev?
Well, what choice do we have is the question. But if not for anything else, for a Monday morning amusement purposes, let me just state a couple of things which needs to be stated as part of the perception challenge you talked about, as part of the deployment of capital that we were mentioning. AFC is rated A3 by Moody's, right? So I didn't rate myself. It was rated by a reputable agency. But when I go and raise money on global capital markets, through the help of my friends in Standard Chartered sometimes, not always these days.
I'm not there.
I know. It's a fact, it's a data point, right? That the spreads I end up paying is slightly higher than other rated institutions. So we call it the address premium, right? And that exists, right? The second point I want to sort of make around perceptions and hypocrisies and vested interests is the issue of energy, right? I mean, it's a well-known fact that close to 1 billion people on the continent has no reliable electricity. It's also a well-known fact that Africa is home to a lot of coal, oil, and gas. It's also a well-known fact that bulk of Africa's gas is flared out, which has its own emission effects, right? It also is a well-known fact that the world is not stopping oil and gas, right? It's also a well-known fact that between 2015, Paris Accords, to now, the large 6 global banks have funded more than $2 trillion in fossil fuel investments, right? It's also a well-known fact that ExxonMobil just acquired new oil and gas fields, and the ExxonMobil CEO was on record saying he doesn't see oil and gas going anywhere in the next 50 years, right? And this kills us because we have a population to feed, a development budget to cater to, a power crisis to solve, and an industrialization waiting to happen. And if gas, for example, will not be adopted as a transition fuel in the general agenda of things, then we have to say that this is not logical and therefore is diabolical, if you understand the context of the word diabolical. So I'm happy that for all the wrong reasons, unfortunately, in 2022, that gas has now suddenly come back, right? So I just wanted to highlight it, Lanre, not to arouse any particular emotions, but to state for one final time that we are up against the odds when we are trying to do what is our right to do and what is happening elsewhere.
we
And
will.
this is where this is where I think Sanjeev is absolutely right, and this is where transition finance comes in, and this is where governments need to step up and say, here's my net zero plan that could be 2080, doesn't matter, 2090. But put the plans in place, because realize that at some point we have to move towards that. So it doesn't have to be in the next 15, 20 years, but put an, so I think this is the encouragement that's coming through. I think we've seen recently, we've seen these Just Energy, JET-TP, the partnerships, Just Energy Transition partnerships. We've seen South Africa, Indonesia, Vietnam, and now Senegal came on, where it's a basket of projects, and the public-private finance is coming in and say, okay, fine, we'll look at this basket of projects and how does it help with that transition. So all these things are very important, right? But we have to take into account that we do live in a hypocritical world also sometimes, that what's good on one day becomes a bit dicey on another day. So, but we shouldn't move our resolve to say, how do we move towards that? And I think this is, for me, that's where transition finance comes into play. And gas is a very, very critical part of it. And we are discovering, there's big discoveries in Africa that could potentially, be game changers, right? So I just want to add that.
Thank you.
Yeah, and it's not going totally unnoticed in places like Europe, where the dogma against fossil fuels is perhaps being a little bit relaxed given events the last couple of years. You now have the Germans, for example, desperately courting places like Nigeria and other countries. So some pragmatism perhaps creeping in there. Now we are, believe it or not, we're actually heading towards the end of the session, and we do have with us Jim Ovia of Zenith Bank, who is going to make a few remarks at the end of this discussion before I invite Jim to take the stage. A couple of things I want to get your closing thoughts on for now on this topic. One is, and they're kind of interwoven, one is looking ahead. Now, we kind of agree that we're in this interesting moment where there's lots of change afoot. A lot of it, yes, lots of risk that comes with that. Not all of it is good. But the underlying sentiment, and please disagree with me if you feel I've got this wrong, is that actually, what, this is probably, if you play your cards right, not a bad thing. And that you can position yourself as an emerging region, be it Africa, be it other parts of the Commonwealth, to actually take advantage of this change that we're seeing. How do you see this evolving in the coming years? What would you say are perhaps one or two of the most important things that we need to understand about where the financing landscape is heading? And if you have any thoughts, this being a Commonwealth conference, and where institutions like the Commonwealth fit into this picture, I'd like to get your thoughts on that as well. So, Sanjeev, first to you.
Just a minute, right? I hope.
Yeah, a couple of minutes.
Okay, all right. Yeah, well, in a bit of a tongue-in-cheek comment that there is nothing much common about the Commonwealth, right? So that's pretty much the challenge we have. That what does it really mean in terms of being in the framework called the Commonwealth? But I think whilst we can debate that, because there is a lot of things common, be it shared history, be it shared traditions, or be it shared legal systems, there is a lot common, so a lot can be leveraged off it. But the point I want to end with is to say that the point I made earlier, I think, that to us, or to me certainly, the continent of Africa is probably at the cusp of a transformational opportunity for itself, because of the way the world has kind of evolved into the state it is in today. The need for resources, the need for new friends, the need for new markets, the need for changing the global supply chain. All of this is almost screaming out for a solution from Africa, because Africa has those solutions. So the point I'll end with is to say that it is up to us as practitioners and business people on the continent to be able to deliver on those. And we have the ability, and if we can systematically and structurally show that we have the ability, the point that Saif made earlier, that we can use our own capital to create the capacity, create the environment, and de-risk projects, then global capital will come. And you know, de-risking doesn't require a lot of money. If you're doing $1 billion of, say, major project, the project development, project preparation money, which is the riskiest form of capital, I admit, is probably less than 2% of the entire bill that you have to ultimately fund. But that money has to go in. And that's where institutions like us will focus on. Thank you.
Well, thank you, and it's good that institutions like yours are out there doing this work, which is, of course, fundamentally important. Saif, before your remarks, very quickly, Sanjeev, are you optimistic, neutral, or pessimistic?
I won't have a chance then to speak.
One-word answer.
Optimistic.
Okay, thank you.
No, and to last point on Sanjeev's, the usage of capital can be scaled up, right? So the de-risking part, so for these institutions to come in and provide just a guarantee, you can scale up your capital on that as opposed to, you know, and this is where public-private partnership come in. And so for me, you know, I'm not going to veer off from what I've been talking about the whole, well, in our session today. It's really about partnership, right? We can't solve it ourselves. They can't solve it. Senegal, Nigeria, Ghana, they can't solve it by themselves. But it is coming together and trying to see how do you bring in the right level of public-private partnerships, the right institutional players, and look to see what are the projects that will really make that development change. And so, you know, I think the opportunities are huge. I think today you have a talent base and a track record on the continent or in the Commonwealth itself that speaks volumes of execution, success, and so we should take advantage of that. And for me, you know, the Commonwealth sits on this huge opportunity. You know, probably the largest population group or grouping of an association or an organization that there is out there. I do feel that the Commonwealth can play a very leading role, especially when it comes back to my earlier points of pressuring and ensuring that, you know, we have, you know, right commitments and right actions. So I think everybody can play a role. But thank you. It's been a pleasure to join. Thank you. Well done, Lanre, and thanks, Sanjeev.
No, thank you. Clearly, there's a hell of a lot more that we could get into. Pardon my language. Big topic. But takeaways there. Are you optimistic as well?
I am. I have to be. Yeah.
So I think the key takeaway here is that
there's a crowd in the pessimism side, you know.
Yeah.
We like to stay away from the crowd.
Change is good. I think that more than anything summarizes this conversation. There's lots of change afoot, and play your cards right. That change is good. Now, before we leave the stage and we hand over to the next session, it is my pleasure to invite Mr. Jim Ovia, the founder and chairman of Zenith Bank, who I believe is going to say a few words up at the lectern. Mr. Ovia.
Okay, good morning. Yeah. What do you want me to say?
I was told that you would be speaking. We're discussing the issue of investment finance for emerging markets.
Very good, very good. Distinguished guests, ladies and gentlemen, social good morning to you all today. And I'm very pleased to listen to my friends here, colleagues here, debate on a few things about tremendous opportunities or lack of it for a number of African countries. I would probably say one item that was not really properly mentioned or addressed is the youths. The youth. Sorry? And women. Yeah. Let's take on the youths. Women will always come leading the youths. We are very proud that about 50% of the population of Africa are mostly youths. And that's a large number. And the youths are doing incredible things in the area of fintech. Yep. And quite a number of fintech companies now in Africa. They are now, we say, $1 billion each. In the past 3, 4, 5 years, at least we'll have about 5 of such in Nigeria. You have a number also in Kenya, South Africa, and remind me again, which other countries? These are big companies that were started only 5 years ago that needed to be recognized and also encouraged. One of the drawbacks for many African countries or the opportunity that had to be built is the area of infrastructure. Infrastructure is a very serious issue that had falling behind, but we need to be able to give support in those areas, either in terms of public-private partnership. And we all know that Nigeria will have a new president, and we want to congratulate him and support him. In the past 5 months or 6 months he's been in the office, he has made tremendous progress. He's traveled to a number of countries, not just emerging markets, but tremendously very successful economies. We have India, Saudi Arabia, recently UAE. No, you forgot the European country, Germany, and where he was overwhelmingly welcomed. And he was able to sign some MOUs, some deals, and I congratulate him for that. I think before I came on, just a few hours ago, one of the youngest ministers, trade and investment, as Doris Anite, that I know so well, she may have made some very brilliant presentations. She is one of the well-admired ministers in the country to support Mr. President. Okay, I've said a few words.
Thank you.
Thank you. Good. Okay, when the team is ready, I'll come up again to say a few more words.
Okay. Thank you so much. Thank you, Jim Ovia. Thank you, Saif. Thank you, Sanjeev. We'll wrap up the discussion there. Thank you so much.
Good job.
Thanks, Saif.
Thanks, buddy.
Okay. Okay, great. We are going to, please stay in your seats. We are going to go straight into the next session. I will shortly be handing you over back to Lord Marland, who will be chairing the discussion, which is on securing global supply chains in the global energy transition. Rather important topic, and we've got some fairly compelling speakers that are joining him for that discussion. Give it a minute or so. Yeah. All right. Perfectly timed.
Straight onto the stage. Look at that.
There we go. Right. Over to you, Lord Marland.
Where shall I go? The end there? Come and sit down, mate. Oh, please. You sit there. No, if you come in here, one of you. Am I mic'd up? Yes, I am. Hello. Again, everybody. And welcome and well done for keeping awake. Amazing achievement. But there's one of our principal sponsors, Jim Ovia. I mentioned you earlier, Jim. I thought you'd be in bed, but apparently you're here, which is fantastic to see you. Thank you very much indeed for everything you've done and supporting us. And great to see you. This session is fascinating because we have two big hitters in the room. We've got the chief executive, none other than of Rio Tinto. It used to be called Rio Tinto Zinc in the old days. And I declare an interest. I'm a shareholder, by the way, Jakob.
Excellent.
Jakob Strausholm, who, I was talking to your chief of staff. She said she's run off her feet by all the travel and outreach that you do, covering so many countries of your major global business. And then, of course, we have Bright Okugo, who is at the very center of the World Trade Organization, and before that was at the African Development Bank, and a major figure there who are long-term friends of the Commonwealth and our organization. I think we'll start this proceedings by just talking a little bit about the geopolitical tensions that exist in delivering a supply chain. I mean, Jakob, starting with you, you have to start thinking about 15 years ahead for your next project. And it must be, I mean, I'm in the property development business sometimes, and I get absolutely maddened by the you think you're going to build something, and during that time you get taxed more, you have regulation thrown in, you have governments taking different attitudes to the business, and now we have a really interesting world with geopolitical tensions, which must make life very uncomfortable for you, where a lot of countries are retreating from global trade in a post-COVID era. Just give us a little bit of insight into your thinking at the moment, the company's thinking.
Yeah, thank you, and thanks for the kind words, and very pleased that you are a shareholder of Rio Tinto. Allow me to start with the history, because sometimes, you know, you understand the future by understanding the history. Later today, we actually have a book launch. We have just turned 150, and we have written a history book.
You've been chief executive since the beginning.
Not really, for 3 years only. But it's quite interesting, because when you go back, you realize that Rio Tinto have actually navigated through 2 world wars and things like that. So supply chain security has been a matter of importance also back in history. If you look at the post-Second World War development, you have seen a Western world that has developed. We have had, we were just talking about it, 3 decades of unlimited globalization, and people haven't thought too much about supply chain security because you just buy on the market. It's slightly different in the East. In the East, countries have tended to work more. Both the Japanese economic development and the Chinese economic development, the Korean economic development have focused more on building a strong supply chain. And I think that is what is happening now with the geopolitical tensions, that most countries have to think deeper about how do I make sure, how can I actually have an industry without having supply chain security?
Bright.
Thank you. It's good to see some old friends, old faces that I haven't seen in a few years. Good morning. And let me just declare that I don't own shares in Rio Tinto.
You can still buy some.
Not too late.
And neither do I have real estate. But having said that, I think, yes, the global tension, we like to call it polycrisis. What we're facing today, COVID-19 is one dimension of it. We also have had the Russia-Ukraine war, and more recently, of course, newer areas of tension and wars. So these things have led to different nations wanting to be self-sufficient, to what we call reshoring, to bring production facilities from wherever they are globally back home, simply because they no longer trust that that whatever they have, let's say in another country, is secure. The COVID-19 showed us, all of us, that really that was an unsustainable way to do business. If you have most of your supply sources concentrated in a particular area, and there is tension, or even a climate event that makes that area no longer able to supply you, you are going to be in real trouble. And this was observed in many, many areas, which led to many instances of countries encouraging their companies to produce at home, even though the classical trade theory tells you that this can only lead to a loss for everybody. You can't produce every single thing that you need for yourself, by yourself, in your country. But this is where we are, and it's led to these difficulties. Now, the issue with respect to how supply chains can be managed under such circumstances, we have in the WTO described it as a re-globalization, where you excuse me, where you spread where you spread your production facilities among more countries, including developing countries. So where you have lithium reserves in natural form in some country, it's good to invest in such a place, not simply to extract the raw lithium from there, but to do a bit of value addition, convert from raw materials to a little bit of value addition so these countries can actually see the benefit of this exchange and interaction. And I think this is what the current de-risking strategy of countries is likely direction is going.
So this is the value chain, internal value chain. From that earlier. So Jakob, on the value chain issue, do you see some of the emerging markets that you're involved in, particularly in Africa? Because sorry, you cut me off somewhere. There we are. Thank you. Particularly in Africa, do you see that happening? Given that we're in a world where interest rates are 5 times as high as they were before, that investment is not as abundant as it was, do you see that there is going to be an acceleration of sort of internal value chain that Bright is talking about?
I think there clearly has been a massive change over the last 2 years here coming out of COVID. Ultimately, it's not really the private companies that determines that, it's societal choices. And you see some countries have been very good at building wealth from extraction by also having processing and further downstream activities. And some other countries have only extracted it and sent it to another country for processing. I would say the choice is for the individual country, and I do think that there's a lot of opportunities around in the Commonwealth, not just for extraction, because that's determined by geology, but also for processing. It is, though, important to say that at this point in time, with addressing climate change, you need not only the right geology, but you also need to find a way to get
Let's come to climate change in a minute, but I mean, you've hit on a very important subject. I mean, do you see, Bright, this, you know, what you were talking about earlier, do you actually see it coming into effect, or do you think there'll be a 5-10 year pause whilst people either adjusted higher interest rates or the investment, the investment money, finance becomes available, and of course that inflation levels out?
Yeah. Well, thanks for that. I think the macroeconomic adjustment that's been going on globally is beginning to stabilize. Interest rates have gone high enough, many people would argue. Of course, central bankers may disagree because they're looking at inflation. But inflation has stabilized and is coming down in many of the jurisdictions. So what is likely to happen in this instance is that investments will start again to flow to countries, because investors will see that the uncertainty about interest rates is being removed somehow as you go forward. Now, I have to say this, that the issue whether people will invest or should invest in these developing countries or poor countries where the raw materials are, I almost feel that it is inevitable. Because some of the narrative that you've been hearing is wrong narrative. The feeling that the risk is higher in these countries, therefore let's not go there to invest. The reality of it really is that if you look at the numbers, the returns from those countries are more than enough to compensate for the risk factor. So I do think that out of a sense of self-interest, investors are going to move towards the poorer countries where you have the natural resources. It may take a while, but you said 5 to 10 years. It may well be. But let them start now. I think the direction is what's important.
But a number of those countries, Jakob, obviously enhances the risk because they don't employ the same rule of law that some of the countries that you invest in. There isn't the clear-sightedness. In some cases, there's a fair amount of corruption and political uncertainty. We've seen the overthrow of several governments in Africa recently. I mean, this increases the risk to you. How do you quantify that when you're going to make an investment of this nature?
Yeah, first of all, if I may say, I in a way agree that you can make good business in many places, but there are always good investment proposals and less good. and it does require competences. So if you talk about extraction, it starts with being able to, for example, explore and develop projects. And then there is the whole country risk, which I tend to look at slightly different, because we are operating in sometimes difficult countries, and yes, there has in a number of countries been a coup d'etat, etc. But nonetheless, if you think about it, if you create projects that are win-win in society's interest and in interest of the private enterprise, then you normally can find ways and means to work that. The way we manage risk is very often by joint venturing, and often also working with the country in which we are operating, so that you create as much win-win as possible, because you do need some stabilizers. And here's the key thing is, you don't need stabilization for a year or two, you need it for decades. That's the problem. The problem with mining is you have to be very, very patient. For us as an investor, it typically takes 15 years before we start seeing revenue. But of course, for the country, you start getting benefits already year one, because you start investing first in exploration and later building a project.
And it's all these ESG issues that we all know about, but particular, I think the thing that differentiates sort of Western countries from the Chinese, for example, is the skills transfer. And that, you're saying, has an immediate effect because you're starting to develop. And for us Commonwealthers, particularly in Africa, it's this alarming figure of 60% of the African population, actually 70% of the African population being under 30, and how you find jobs for them. And that presumably fits into very much your ESG thinking.
Oh, absolutely. But I do think that the whole global world nowadays, more and more, everyone, China is very committed as well to raise the bar on ESG matters. We joint venture with Chinese partners in some places. But I do think one thing that we certainly have learned is important for long-term success, and that's the local employment and use of local contractors. So we went into Mongolia, where we have just finalized building the world's fourth largest copper mine. And we promised the government to have 80% Mongolians, and actually right now we have 97%. It is impossible, even though there was no mining experience. It takes some effort to train people and to build a list of reliable smaller contractors. We are right now about to launch probably the world's largest mining project in Guinea, in Africa. And it's the same.
And what are you mining there?
Iron ore here. It's going to be, there is a place called Simandou in the middle of Guinea. They have the highest grade iron ore on the planet. The only problem is you need to have a railway of 650 kilometers and build a port, etc. So the infrastructure is enormous. But it's a huge opportunity for Guinea. And the formula for us is to take the time it takes to train local people and get that to work and build it to the highest standard. The reality is we don't have a choice as a blue chip company. Whether we operate in Canada or in Australia and Guinea, international NGOs, they will look at and hold us to account to the same standards everywhere. But that's also where we can actually contribute something. If we can hold the right standard and create local employment.
So just as an example, let's take Guinea. You say there's a 650-kilometer railway. Will you be involved in building that railway?
Yeah, now it's a joint. It's a partnership with. We have 4 partners here, so we have a joint ownership. We don't build the railway, but we build the mine. So we each do.
So who funds the railway?
Well, we fund our part.
Right. So
Yeah.
4 of you will fund
Absolutely.
the 650-kilometer
Absolutely.
railway.
And
so you're bringing real infrastructure benefit.
Yes,
to the
and it will be
And
multi-user.
the port will be similar?
Yes,
Or
and it will be multi-user, so it can create other employment than just iron ore.
Yeah. And so this plays into the world trade.
Well, I went to Guinea a few years ago in my previous role in the African development. I went to a mission there. We went to the bauxite, maybe
Yes.
your place is near there. Beautiful road from Conakry all the way to, but the road stops exactly by where the mine is. Beyond that, there's absolutely nothing. So ESG, in my view, needs to go beyond this sort of, it wasn't by Rio Tinto, by the way, so I'm not talking about your company.
It was the Chinese, was it?
It's somebody, yes. It stops exactly there. And the road was quite good from Conakry to that point. But this is the old model of international business relationships. Because it's simply, what is it telling you? We're building this road infrastructure to get there, to extract this, take it to the port, and take away. What I think the world is looking at now is this value chain issue. To be able to process some of this raw material within Guinea, create jobs, government will get more taxes. They can build their own roads beyond that little village where this thing ends. And I think that is proper ESG, because the social dimension of it is going to become very manifest to everybody. All the citizens will see something is going on. I hope that the rail, because I don't know the location, it's not going to be of a similar arrangement where we just go get the raw material, bring it to the port, and off you go type of thing.
Let's come back to this subject you touched upon, Jakob, of climate change. You know, it is now critical. Actually, it's ironic that we're having this event with COP taking place and all sorts of oil deals being done with the UAE and visitors to the country, so I read in the press this morning. But how much part now does the climate change and sustainability issue play in your decision-making and thinking? Because, I mean, clearly you're building 650 kilometres of rail. It's going to a port. It'll then be shipped somewhere. And, you know, that isn't actually good for a global footprint. But it is something that you have to talk to your shareholders about and talk to the outside world to justify your development. So just talk us through what's the dynamic that goes on within Rio Tinto on that subject.
Look, I would argue that climate change is at the heart of our strategy, at the heart of everything we do. And if I should just start with that little example of Guinea, the fact is that you can extract iron ore that has a grade of 66, 70% is pure iron ore. 66 means that there's very little impurities. Elsewhere, very often you extract at 55, 58. In Australia, you have high grade at 62. But the fact that you can extract the highest grade means that you would use much less energy and you will have much less CO2 emissions. So you're actually creating a better world by extracting the high grade rather than the low grade. So that's one example of it. But what I would like to say on this thing, first of all, yes, and I'm going myself later this week to Dubai, to COP28. It's very disappointing. 28 years in a row, we haven't really moved the dial. Fossil fuel is still 82% of the world's energy usage. But it's not a matter of phasing out fossil fuel, it's a matter of creating an alternative. And addressing climate change is fundamentally about building a new energy system. It's a very physical thing about creating electrification and renewable energy. And that will require a lot more materials that we are producing, a lot more copper, a lot more aluminium, and a lot more battery materials. So it's an opportunity, not just for Rio Tinto, but for a number of Commonwealth countries who actually has the geology, partly starting with the extraction, but as you rightly say so, trying to build a more integrated supply chain processing and further downstream activities.
And of course, Bright, the issue of trade does mean transportation, and that is not, as I said earlier, necessarily good for the carbon footprint. I mean, what's the WTO's position on all this?
Well, thank you. We are working.
Tenet, more to the point.
We are working it. I mean, you are right. I mean, if you're doing trade, you've got to move goods from where they are produced to where they are needed. So certainly that would involve the carbon footprint, increasing. And this has been happening. But we like to see the other way, that trade is part of the solution to all of this. Because what are the things we need to solve the climate change problem? You need to be able to move equipment, if you like, renewable energy type of products from one location to another. If you don't have that, you're not going to be able to solve the climate change or the carbon, net zero carbon problem. Absolutely, there will be nothing happening. So to the extent that it is, we are, for example, in touch with the shipping industry. You mentioned Mailk earlier. We have many of them who come to us. We've convened them using our convening power to engage with them. Green hydrogen is being developed. Okay. And they themselves were very pleased that we provided a forum for them to exchange ideas on how best to transition from current bunker fuel type, which contributes to increasing the carbon emissions, to transition into hydrogen type means of moving goods by ship. So if you take this aspect of, you then see how trade becomes, they are greening, if you like, their own transportation, their own mechanisms for moving goods and goods in particular. And we are working with them to ensure that some of that transition doesn't involve inadvertently putting a higher tariff, for example, on goods that are renewable in nature as far as energy is concerned. And that is a major part of what the discussions we have at the WTO on how to ensure that markets are open and you encourage trade in those types of areas for goods that will get us to net zero. Let me just say one small thing with respect to the trajectory we are on now. The studies done recently have indicated that we are not on track to meet 2 degrees Celsius above the pre-industrial level that was projected. Never mind going to 1.5 degrees Celsius, which is even more severe. And the way that trade is essentially coming into this is exactly what I just mentioned. To have very low duties and tariffs on renewables, solar panels and things of that type, that will enable this transition to take place the way we want it.
Well, the solar panels aren't going to be much use in this country. I don't know if you came here by car this morning or
I walked, actually.
Yeah, well, but obviously in Africa, sorry. Yeah,
I just wanted to make one point. I mean, we need to solve the challenge of transport in everything. I get that. But if you look at the numbers, it's not transport that's the biggest issue around emission. It is actually producing stuff, producing all this stuff. Everything you see around here comes from extractions and manufacturing. And that's a much, much larger basket. So often you actually have an emission by moving things from a mining country to a consuming country, but that CO2 emission is very small compared to how you do the manufacturing, whether you do that with fossil fuel or you do it with renewable energy. I'm not saying we shouldn't solve shipping. I think there is a solution in the future, probably with ammonia or something like that. And there might be some biofuels in between. But the real big issue is to solve the energy in manufacturing. That is what can make the biggest difference.
And your point, I was Minister for Energy and Climate Change, so I understand the importance of transition, which seems to have gone out of the window, but we'll get on from there. So lastly, because I think I'm getting the eye that we've nearly you can see some of them chomping at the bit for lunch. I mean, Bright, predicting ahead, do you see world trade going back to the boom times that has happened in the last 10, 15 years, before COVID, before Ukraine, now before Middle East? Or do you see it plateauing for a while and then accelerating? What's your sort of prediction?
It's a very difficult question because...
Well, it's not meant to be easy, you know.
what we had predicted, what we forecast for trade this year was a 1.7% growth for trade in 2023. We had to revise it just a few months ago to 0.8% growth, which is essentially playing into the point you were making, that how do we see it going forward? What has happened is that there's a little bit of indication of what you can call this fragmentation is what we call it. Some element of it is beginning to show. But I personally think that this is a temporary adjustment phase because we're just recovering from the COVID situation. And I think that once COVID situation is fully recovered from, if you look at the trade relationship between the EU and China and between the US and China, the numbers are still very high. They're not going down because this was the fear with respect to fragmentation. So I think politicians on one side, you said you were a politician?
No. I gave that up a while ago.
So politicians have one particular trajectory, the way they're thinking about it. But businesses, if you look at the numbers, you're actually seeing it's slightly different from what politicians see. So I'm optimistic that people will look at the benefits of trade and free trade and begin to talk to each other on how to resolve the differences. Differences among human beings will always be there. Will always be there. It is how you manage that particular thing, and I think I'm optimistic for the future.
Jakob, are you optimistic for the future of?
Look, it's very difficult to predict how trade will develop between a number of developing countries, but it's quite given that trade can be so beneficial for developing countries. You need, it's absolutely crucial. Obviously, it has to be fair trade. And I'm absolutely convinced the growth opportunities in Africa can, for example, only be unleashed if there is a growth in trade as well. And defining that trade pattern and fair trade pattern and making sure that there's sufficient manufacturing in different parts of the world is going to be crucial. I think that a pathway will be found, and if I was not optimistic about that question, I would not be optimistic about country developing. So yes, I am.
Good. Well, and of course we have in this room representatives from some of the countries where they are growing. Cameroon, Bangladesh, Uganda, Kenya's growing again, Sri Lanka, just to name a few of countries and Singapore, which seems to go on endlessly. So there is hope, and it's very good that you could end on a message of hope, because without trade, you don't lift countries out of poverty. Without the value chain, you don't increase countries' prosperity. And without ESG and skills transfer, you don't educate a nation. So those are three very positive things. Anyway, it's a huge privilege to have had you two with us. Thank you both for sparing the time. Thank you. And we look forward to following your careers with interest.
Thank you.
Thank you. Thank you very much.
Thank you, Lord Marland. There is hope. And for those of you who've been hoping for lunch, I have very good news. It starts now. We will be back here in 1 hour for the next plenary on digital transformation, accelerating global health coverage. And for those of you who are participating in the roundtable on education technologies, skilling the future, that is in the courtroom, which is upstairs. That's it from us for now. Enjoy your lunch. Thank you again to Lord Marland, to Jakob, and to Bright for an excellent discussion. See you in an hour.